Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll continue with Accounting Chapter 6, Unit 3, that is Consignment. So let us begin. This is lecture number 2. Chapter 6, Accounting for Special Transactions, Unit 3, Consignment. We'll continue from here. Return of goods from the consignee. Return of goods from the consignee to the consignor. Consignment goods can be returned by the consignee because of many reasons, like poor quality of the goods not up to the specimen or destroyed in transit. In such a situation, the question arises, what is the valuation of returned goods? Consigned goods returned by the consignee to the consignor are valued at price at which the consigned to the consignee valued at a price at which it was consigned to the consignee. Expenses incurred by the consignee to send these goods back to the consignor are not taken into consideration while valuing it because the goods were already in a saleable condition and the location and changing the location back from consignee to consignor is not a cost which must have to be incurred to sell the goods. This is generally called secondary freight in accounting term. Next concept, account sales. An account sales is the periodical summary statement sent by the consignee to the consignor. It contains the details regarding the sales made, the expenses incurred on behalf of the consignor, the commission earned, unsold inventories left with the consignee, any advance payment or security deposit with the consignor, and the extent at which it has been adjusted. Balance payment due or remitted. It is a summary statement and is different from sales account. Next, accounting in the books of consignee. In consignee, the consignee is not concerned when the goods are consigned to him or when the consignor incurs any expenses. He is concerned only when he sends an advance to the consignor, makes a sale, incurs expenses on the consignment, and earns his commission. He debits or credits the consignor for all of these, as the case may be. Following entries are recorded in the books of consignee. On making sales, cash account debit or bank account debit or debtor's account debit to consignor's personal account. For expenses incurred on his commission, consignor's personal account will be debited to bank account for expenses incurred. For any advance paid to the consignor, consignor's personal account will be debited to bank account. For recording the bad debt account to customer's account, credit customer. For writing off bad debt when del creditor commission is not allowed. So consignor's personal account to bad debt when del creditor commission is allowed, the responsibility of the bad debt is with the consignee. So commission account to bad debt account when del creditor commission is allowed. Next, advance by the consignee versus security against the consignment. Generally, the consignor insists the consignee for some advance payment for the goods consigned at the time of delivery of goods. This advance payment is adjusted in full against the amount due by the consignee on account of the goods sold. But if the advance money deposited by the consignee is with is in the form of security against the goods consigned, then full amount is not adjusted against the amount due by the consignee to the consignor on account of goods sold if there is any unsold inventory left with the consignee. In that a case, proportionate security in respect of unsold goods is carried forward till the time the respective goods held with the consignee are sold. Next example, example 6. 1,000 units sent on consignment, cost being rupee 5 per unit, freight rupee 500, normal loss is 15%. Find the value of consignment stock of 100 units. Solution. 1,000 units multiplied by 5 per unit, 5,000. Freight is 500. Total is 5,500 divided by number of units. Normal loss is 15%, so from 1,000, 150 units is lost, 850 is remaining. So cost per unit will be 5,500 divided by 850 equals 6.47. The value of consignment stock equals 6.47 multiplied by 100, 647. 647. I believe you understood. Next question, example 7. Suppose in the above example, loss was abnormal. This was abnormal loss. Goods 1,000 multiplied by 5 rupee per unit, 5,000. Freight 500, total 5,500 divided by units. This is normal loss, so the extra loss will be charged to P&L separately. The present unit will not bear that, so divided by 1,000. Cost per unit equal to 5,500 divided by 1,000 equals 5.5. Consignment stock equals 5.5 multiplied by 100, 550. 550. I believe it is clear. Write a note over here. If it is not known whether the loss is normal or abnormal, it is always treated as abnormal loss. I believe you understood. Let us continue. Example 8. Let us continue with example 8. Goods costing rupee 3 lakh sent on consignment at cost plus 25%. Consignor expenses 10,000. 1/10 of the goods were lost in transit. Insurance claim 3,000. Find net loss. Solution. Find net loss on account of the abnormal loss. So it is given over here in this question that this loss is an abnormal loss. Value of goods 1/10 lost in transit multiplied by 3 lakh, it is 30,000 plus consignor's expenses will be added. Consignor expenses 1/10 multiplied by 10,000 it is 1000. So total 31,000 less insurance claim received. Insurance claim is 3,000. So actual loss is 28,000. Actual loss is 28,000. I believe you understood. Let's take an example. Example. Invoice price of goods sent equals 1,20,000. Invoice price is cost plus 20%. 20% of the goods is lost. Insurance claim received is 4,000. Find loss on account of abnormal loss. Solution. Cost of goods sent 1 lakh. Invoice price is 1,20,000. So for 120 it is 1,20,000. So for 100 it would be what? So 1 lakh. Goods lost equals 20% of the goods lost, so 20,000 minus insurance claim received. Insurance claim 4,000. Actual loss is 16,000. Actual loss is 16,000. I believe you understood. Next example. Example. Goods sent at cost equals 10,000. Normal loss is 10%. Amount of loss to be charged in P&L account. Normal loss is 10%, so nothing will be charged in P&L account. This would be nil. Nil. Write a note over here. Normal loss would be adjusted. Normal loss would be adjusted to stock value only abnormal loss is charged to P&L account. Only abnormal loss is charged to P&L account. I believe you understood. Let's move ahead. Next question. Question 9. Example 9. 1,000 unit costing rupee 900 each sent on consignment. Consignor expenses is 12,000. 50 unit lost in transit. Consignees incurred carriage of 8,000. Determine the value of consignment stock of 200 units. 200 units consignment stock. Solution. Goods lost. $200 multiplied by 900 each, 1,80,000. Consignors expenses 12,000 multiplied by 200 divided by 1,000. 200 divided by 1,000 equals 2400. Consignees expenses is 8,000. 200 unit divided by 950. This won't be 1,000, this would be 950 because 50 units is lost in transit. So consignee received only 950 units. So this would be 950 equals 1684. 1684. This would be 184084. Value of consignment stock. Let us continue. Write an example. Example. Suppose in example 9, go down rent incurred by consignee was rupee 4,000. Determine value of consignment stock. Determine value of consignment stock. In this example, if the consignee has also incurred go down rent worth 4,000, what would be the value of consignment stock? Solution. Same as example 9. Same as example 9. There would be no change in the solution. By this information, there would be no change in the solution. Let's continue. Right, commission is of three types. Ordinary commission, del credere commission, overriding commission. Ordinary commission is simple commission. So simple commission rate to be applied on gross sale. On gross sale. What is del credere commission? Additional commission is given where in bad debt shall be borne by consignee. Overriding commission, extra commission to make sales above specified price. Above specified price. I believe you understood. Let us continue. Write a note about Del Credere Commission. Del Credere Commission is given on total sales and not on the credit sales. However, if an arrangement or agreement is made that Del Credere Commission shall be given on credit sale, then it shall be allowed only on credit sale. Only on credit sale. Next example, example 10. Goods sent on consignment at cost plus 25%, commission of 10% on sales at invoice price, and 25% of any surplus realized above invoice price. 10% of the goods sent on consignment, invoice price of which is 12,500 was destroyed. 75% of the total consignment sold by the consignor is 1 lakh. What would be the amount of commission payable to consignee? Read it once more. Goods sent on consignment at cost plus 25%, commission at the rate 10% on sales at invoice price, and 25% of the surplus realized above invoice price. This is also a commission. 10% of the goods sent on consignment, invoice value of which is 12,500 was destroyed. So 10% which is destroyed is 12,500. So can we calculate the total value of the consignment? Yes, it would be 1,25,000. If 10% is 12,500, then 100% would be at invoice price 1,25,000. Solution. At invoice price, total consignment $1,25,000. At invoice price, 75% of total consignment, $1,25,000 multiplied by 75%, 93,750. It is sold for what? 1 lakh. Commission. $10 of 93,750. Commission 10% of sales at invoice price. So 93,750 is the invoice price. So 93,750 multiplied by 10%, we have given the commission plus 25% of any surplus realized. Surplus realized. So 1 lakh minus 93,750 is the surplus above invoice price plus 25% of surplus realized. So 1 lakh minus 93,750. This is the surplus. 9375 plus 1562.5. This is 10937.5. This is the value of commission. This is the amount of commission. Next question, question 11, example 11. X of Kolkata send goods costing 1 lakh to Y of Delhi. 3/5 of the goods were sold by the consignee Y for 70,000. 3/5 of the goods sold for 70,000. Commission is 2% on sales plus 20% of gross sale less all commission exceeds cost price. What will be the amount of commission? Solution. Cost of goods sent. Cost of goods sold. 1 lakh multiplied by 3 by 5. So 60,000. 60,000 worth of goods sold for 70,000. Commission. 2% of 70,000. 2% of 70,000 plus 20% more commission on gross sale less all commission. So 70,000 minus 2% this value. So this value would be 1400 minus all commission. So minus 1400 exceeds the cost price. Cost price is 60,000. Commission of 2% on sales price done plus 20% of gross sale less commission exceeds the cost price. So it would be 20 by 120 over here. Solve it. 1433.33. This would be 2833.33. I believe you understood this. Let us move ahead. Example 12. A sent goods to B at cost plus 25%. Invoice value is 2 lakh. 4/5 of the goods sold by B at 1,76,000. Commission is 2% up to invoice value and 10% of any surplus above the invoice value. What would be the commission? Solution. Invoice value of goods sold 4/5 multiplied by 2 lakhs. This would be 1,60,000. Surplus equals 1,70,000 minus 1,60,000. 1,76,000 minus 1,60,000 equals 16,000. Commission is to be calculated on 2% of 1,60,000 plus 10% of surplus. So 10% of 16,000. So it is 3,200 plus 1,600 equals 4,800. I believe you understood. Let us move ahead. Let us move ahead. Example 13. A sent goods. A sent goods costing 1 lakh to B at a cost plus 25%. A expenses 2,000. 3/5 of the goods were sold by B at 85,000. Commission is 2% on sales plus 20% on gross sales less all commission exceeds the invoice value. Determine the amount of commission. Solution. Commissions equals 2% of 85,000 plus 3/5 the goods were sold for 85,000, so 85,000 minus 2% of 80,000, 85,000 is 1,700. This is also a commission, so minus 1,700 minus invoice price of goods sold needs to be calculated. Invoice price of goods sold, 3/5 of the good is sold, cost plus above 25%, 125%. So this would be 75,000. Invoice price of the goods sold is 75,000. This 75,000 needs to be deducted from here, which is specified in the question. Commission exceeds the invoice value. So invoice value is 75,000 and this is 20%. So multiplied by 20 upon 120. Solve it. 1383.33. 3083.33. 3083.33. Next is good return by consignee. All expenses incurred by the consignee to send back the goods to consignor shall be ignored for valuation. Account sales. When sales relating to the consignee is completed or the time period is fixed by the consignor expires, the consignee sends a statement relating to the goods received, destroyed in transit or in godown if any, effected sales including selling expenses and commission, deducting the amount of advance remitted by him to the consignor, and finally the amount due to the consignor. Such a statement is known as account sales. Specimen is given over here. Sales made. Supposingly sales made is 50,000. Expenses on behalf of the consignor is 1,000. This needs to be deducted. Commission earned supposingly 10%. So 50,000, 10% is 5,000. Bad debt. If del credere commission is not allowed, it is 2,000. And supposingly if some advance is given or BR is given, 20,000. The statement is 22,000. 50,000 minus all these expenses, 22,000 is the balance. Let's see the journal entries, how you'll pass the journal entries. X send goods to Y. X is a consignor, Y is a consignee, costing 50,000. Consignment account debited to goods sent on consignment. In the books of Y, there would be no entry. This would be in the books of X, consignor, consignor, consignee. No entry in the books of the consignee. If invoice price is cost plus 20%, what entry will pass the consignor? Consignment account will be debited 60,000. 50,000 plus 20% is 10,000. So 50 plus 10 equal to 60 to goods sent on consignment, and goods sent on consignment 10,000 to consignment account 10,000. The consignee will not pass any journal entry. X spent 1,000 on packaging, so consignment to bank 1,000. Because this expense is done by consignor, so consignee will not pass any entry. Y sent bills receivable to of 30,000 to X. So in the books of X, in the books of consignor, bills receivable to Y, and in the books of consignee, X to bills payable. Next, bills receivable paid by Y. In the books of X, bank to bills receivable. In the books of Y, bills payable to bank. Next entry, Y spent 2,000 on freight, 2,500 on rent and 3,000 on insurance. The total is 3,400. Consignment to Y to Y. That means consignor to Y to consignee. Consignment to consignee. Over here, X account would be debited, consignor account would be debited to bank, consignor to bank. Next, 4/5 of the goods sold for 55,000. So consignee to consignment, over here bank to consignor. Next is bad debt of 600. So consignment to consignee. In the books of consignee, it would be consignor to debtor. Next, commission 10% on sales, consignment to consignee. In the books of consignee, consignor to commission earned. Making final settlement of the goods, final settlement of the value. In the books of consignor, bank account would be debited to consignee. In the books of consignee, consignor to bank. Next is consignment stock. In the books of consignor, stock of consignment to consignment. There would be no entry in the books of consignee. Profit or loss on consignment. So consignment to Y to P&L, consignment to consignee to P&L on profit. For loss, profit and loss account would be debited to consignment. If invoice price is cost plus 20%, stock of consignment to consignment 12,600 and 10,000 multiplied by 20% is 2,000. This 2,000 would be stock reserve. So consignment to stock reserve. I believe you understood. Let us continue. Next example, example 14. Robin consigned goods for the value 8,250 of Raj of Varanasi and paid freight of 650 and insurance of 400. So the value of the goods is 8,250, the freight is 650 and insurance is 400. I believe you understood this. He drew a bill on Raj for 3 months after date for 3,000 as advanced against consignment and discounted the bill for 2,960 from bank. Further, he received the account sales from Raj showing that the past of the goods has realized gross 8,350 and that is expense and commission amounted to 870. The stock unsold was valued 2,750 unsold stock. Consignee wants to remit a draft for the amount due. What would be the amount of the draft? Solution. Amount of draft equals 8,350 gross realization. Gross realized 8,350 minus, he had already paid 3,000, so minus 3,000 minus his commission is 870. Deduct 870, this amount would be 4,480. 8,350 is the gross realized amount, minus 3,000 is BR already given, and 870 is the commission. So the amount of draft or remittance would be 4,480. Next question, example 15. C of Bangalore consigned goods costing 3,000 to his agent at Delhi. Freight and insurance paid by the consignor is 100 rupees. Consignee's expenses is 200. 4/5 of the goods were sold for 3,000. 4/5 of the goods sold. Commission 2% on sales. Consignee wants to settle the balance and help the bank draft. What would be the amount of the draft? Solution. Amount of draft equals 3000, consigned 3000. But out of this 3000, 4/5 is sold and the value of sales is 3000. So this 3000 minus 2% on sales, the commission is 2% on sales. So 3000 multiplied by 2%, 60. So minus 60. Consignee's expenses is 200, that needs to be recovered from the consignor, so minus 200. This would be 2740. 2740 is the amount of the draft that is to be given by the consignee to the consignor. I believe you understood. We are stopping here. We are stopping here. Thank you.